Financing a custom home is not as simple as getting a mortgage. And if you don't understand it upfront, it can cost you a ton of extra money down the road. A lot of people assume once you pick a lot and pick your builder, the financing is pretty straightforward. But in reality, this is where the structure of the deal matters the most. Because when you're building a custom home, you're not just financing a product, you're funding a process. You may be buying the lot first, you may be funding design, engineering, and architecture out of pocket, and you're funding construction in stages. And you're often carrying significant interest before you even move in. I've seen people underestimate expenses and interest early on, and it creates a lot of stress throughout the process. So in this video, I'm gonna walk you through step by step the things you need to know about financing a custom home so that this process is as easy and smooth as possible. We're going to talk about loan structures, how money moves around, and the different things you may be paying out of pocket at the beginning. Because if you understand this process up front, the whole thing is a lot smoother and easier to manage. My name's Jared, and I'm a real estate broker who lives in Aledo, and I'm building a custom home myself, and I help people just like you find and build that perfect home as well. So if you are new to the process, and this is your first time on the channel, go check out my other content where I cover everything you need to know about building a custom home in the Aledo area. And if you're ready for some help and to be connected with some of the best builders in the area, reach out however's convenient. Phone, text, email, or hop on my calendar at the link below. But let's get started with what you need to know about financing a custom home. Okay, so step number one is just simply understanding what you're actually financing, because the custom home process is very different than buying a completed home. So you're financing everything from the lot to the site prep to maybe changing the grading to redirecting water flow to landscaping to the slab, obviously the structure. You're gonna have engineering costs in there, you're gonna have architecture costs in there. Sometimes those are paid out of pocket. Ideally, there's some contingency reserves in there. And some people building custom homes already own their lots. Or maybe you're buying your lot as a part of like initially kicking off the process, and that's still what you're looking for. But making sure you understand all of this in the scope of the project is super important. Okay, now step number two is you want to choose the right loan structure. And I've mentioned this in other videos. Unfortunately, the loan is an area where the relationship does matter with your lender, but the relationship and liking the person is not as important as making sure you're getting the product that is best for you. So I'm going to cover a couple of the main product types and loan structures that you could hit. I'm sure banks may have different variations of these, but these are going to be the major ones. So one, you can have a construction to permanent financing single loan process. So this is probably going to be at a more local or regional bank that may hold on to their loans long term. So they're going to set up the whole loan up front. They are going to fund the loan, and we'll talk about the draw process in a minute. They're going to fund the construction like normal. And then at the end of the day, when everything's completely and totally done, they're just going to transition that total loan amount into a permanent financing. They're going to amortize it like a normal loan. And as long as all the values are as expected and correct, you basically just transition and flip into a long-term loan. That sounds great. I like the simplicity of that. I like the streamlined nature of that. Probably on the back end might save some cost. I don't know if the front end, they add some cost there or not, but that sounds like a good option, right? It also may not work for everybody, because if that's the process you're doing, you have to start building. Like when you buy the lot, if you're gonna do that type of loan, you have to start right away. So the second option is you have a separate loan that just does the construction. And then when you're done with that, you refinance into permanent financing. And then there's a subcategory. Like this is broken down into two separate processes. One, you could buy the lot and you could sit on it for a year or two. And then you could get a construction loan. So you got the lot loan, then you've got the construction loan. And then at the end of the day, you get your permanent financing loan. Or you could do a construction loan that allows you to purchase the lot on the first draw. And so that's just like, hey, you close on the lot, it's the first draw of the larger loan, and you just start the loan process. So those are kind of the subcategories of that. And then the third option, which I'm gonna give a big caveat in a second, is basically where the builder carries the construction and you close at the end of the day. I'm going to tell you that this is basically not going to happen on custom home construction. But if you ended up going the semi-custom route, that is a possibility, right? Maybe you don't want to deal with the complexities of true custom. So you look for a builder who has a spec home in process that you can make some modifications to. And then this whole video is not as important to you because you just buy the home at the end of the day and the builder carries the loan and everything through closing. But one of the primary reasons a custom home builder will not do this is because you're building a custom home. This is going to be highly customized for you and unique, and they don't want the responsibility to have to resell that if you are unable to close of the construction process. And if you are in the process, if you are looking for builders, I do have another video that talks about how to evaluate builders in the Aledo area that is directly connected to loan processes, how they work. So that's a great resource to look into first. And if you want more personalized help, give me a call, shoot me a text, send me an email. Okay, now step number 3 is making sure you understand your cash requirements to fund the entire project, because that is very different than just qualifying for a monthly payment. So you're going to have probably a down payment on your lot or the initial construction loan. That's going to be a chunk of money. And then at the end of the process, depending on where everything lands, you may end up having to bring more money to make sure you have certain equity ratio. Depending on how the loan is structured, you may or may not be paying your engineer, your designer, and your architect out of pocket. You'll want to have contingency reserves, hopefully built into the loan itself. But if not, you want some cash set aside for that. And then your interest carry along the way, which we'll talk about specifically in a minute. Okay, now step number 4 is you need to make sure you understand the draw process, because unlike a traditional loan or mortgage, the money is not all released up front. So you're getting approved for the loan, but you're not getting all that money that you just hold on to and pay the builder as you go. Instead, funds are released at stages through a process. Now, the way my process works, it might vary slightly depending on which bank you work with, is that on a weekly basis, so it requires weekly input from me, my builder sends me a draw sheet that mentions the items that were completed in the last week and the total amount that he's requesting. I look at it, I sign off on it, I send it to my bank officer, and then they put it in queue for the property to be inspected to make sure that work was actually done. And then once that's confirmed, then the funds get released to you or the builder, however you've set that up, so that the builder can then pay their contractors. So this does require some level of involvement from you as well on a weekly basis so that all the contractors and the builder get paid along the way. Okay, so step number 5 is you need to make sure that you've budgeted for your carrying cost throughout this whole process, because you may already have a mortgage that you're paying, or you may have a rent payment that you're paying. And then if you go buy a lot separately, maybe you have an amortized loan on a lot, and now you're getting a construction loan to finance construction. So you're going to have, maybe you have 3 payments you're making, right? Or maybe you do maybe the first draw covers the lot, but now you start out with a little higher monthly payment on your construction loan because the lot's involved there. And the longer this takes, the bigger that price gets on a monthly basis. And the longer it takes, obviously, the more overall interest you're paying. So on my build, we started out, the lot was the first draw. And so I started out with about $2,000 a month or something was my monthly payment. Not a big deal. I'm currently at a little over $6,000 a month right now. And by the time we're totally done, my total payment's going to be somewhere between $7,000 and $7,500 a month in interest only, until we're able to buy out the construction loan into permanent financing. So that turns into north of $50,000 in interest alone. Doesn't count towards the purchase, doesn't count towards the equity, doesn't count towards anything other than financing the project along the way. Step number 6 is that you need to understand what can change mid-process and how that affects you. So right off the bat, you have a very large category of construction delays, right? Any construction delay is going to directly impact the carrying cost and the interest accrual on your property. And construction delays can happen for a number of reasons. It can happen from weather, it can happen from material shortages, it can happen from changes you make mid-process that require, ordering something new or changing or waiting on a contractor. Delays could happen because contractors are booked or something isn't available to complete the project that they're working on right now. They go work on another job. Now there's a delay to get them back. Any one of those things is going to add to your interest carrying cost. And that's totally separate from cost overruns related to material pricing changing or not being able to get what you actually wanted. You have to pick and choose something different, or you interjecting yourself mid-process like I like to do and picking something more expensive than was budgeted. So this is where understanding your budget is really important on the front end. And if you haven't watched it yet, I do have another video that talks about all the costs associated with building a custom home in Aledo. You should go check that one out if you haven't seen it as well. Okay, now step number 7 is going to be the appraisal. And this is probably one of the biggest risk sections of this whole process, because when the home is completed or substantially complete, the bank, in order to do your permanent financing, which this is the last step coming up next, the bank's going to want to see an appraisal. Now, there may have been an appraisal, and likely was, at the beginning stages of the process. And that was kind of estimated based on what they think everything's going to be. And you may get a different appraiser on this at the end of the stage, and there may be different market economics going on. So this is going to be one of the bigger risk factors depending on where you were aligned early in the process, because homes don't always appraise at exactly what they were built for. They likely won't. Hopefully it's going to appraise for higher. But if your home is highly unique or in a neighborhood that maybe it doesn't quite fit in, there's a potential you could have appraisal issues. And if the appraisal comes in low, that means that the loan to value and the ratios that the bank has approved for this new permanent loan are going to get applied to that lower rate. So that may require you to bring extra money to the refinance table, right? Which hopefully is very minimal, but on larger deals, these differences could turn into tens of thousands, $50,000, $100,000 differences, depending on the loan structure and the expectations. So all of this ties directly into picking the right lot in the right neighborhood, which I cover in my video talking about, how to buy land for a custom home. So check that out if you haven't seen it yet. Okay, so the last step, and step number 8, is going to be transitioning into permanent financing. And now if you did one of the construction to permanent financing loans, this may be you just transition into the amortized loan with predetermined information that you knew about up front. Super simple, straightforward. If you didn't, you may need to refinance and buy out one or more existing mortgages on that property. So you could have a lot loan and the construction loan, and this would refinance both of those into a single permanent loan at existing and current rates, whatever that happens to be. So that's a little bit of a risk. Maybe it goes up, maybe it goes down. Or if you, for some reason, ended up doing a more semi-custom product and just tweaking things along the way, this may be just a simple purchase loan once the product and the home is complete. Okay, so what are some of the biggest mistakes I see buyers make in the custom build process? First off, the initial thing is just kind of assuming that this works like a normal mortgage and a normal home buying loan process. Secondly, for those who don't make that mistake, it's not understanding how the full interest carry impacts your checkbook. And speaking of that, it's just not understanding the full cash requirements throughout the build process is number 3. Number 4 is making too many changes mid-process. 5 is going to be building in an area that doesn't support the value, which is going to cause appraisal issues. And last but not least is choosing a loan structure before you really understand your project. Okay, so how can we keep this fairly complicated process as smooth as possible? First off, you want to make sure you understand your full build project early. You don't want to try to figure it out as you go like I did. Second, you want to choose the right loan structure from the beginning. Third, you want to keep your builder and your lender aligned with your needs and your processes. And fourth, you want to minimize unnecessary changes. And remember, this whole process is a lot less about finding a lender you like and more about finding a loan structure that fits your needs and your situation. All All right, so financing a custom home can feel incredibly complicated. But once you understand the basics and you can plan accordingly, the whole process becomes a lot smoother and simpler. And that's also where I come in. If you have questions, you need help, you want to be connected to good lenders and good builders, reach out, let's have a conversation. Let's start that ball rolling in helping you find that perfect builder to build that dream home for you and your family.